Good morning, guys. I hope you guys doing well, and welcome to today's edition of the London Session Outlook. Today is February. No, actually, it's not February. It's March. It's March 1st, actually, and it's 20 minutes till 10 p.m. in London when I'm recording this market update. My name is Alejandro Zambrano, and I'm the Chief Market Strategist of ATFX UK. Starting it a little bit later today, I'm sorry about that. Just caught up in a meeting. We're working on producing some new sort of market updates for you guys and talking with the designers and people like that. So ran over a little bit. Now let's talk markets. DAX is soaring. I hope you're able to capitalize a bit on that. So we're going to talk about that. We're going to talk about the pound and euro dollar and gold and crude oil as well, and the S&P 500. If you do have any questions, just put them in the question box there. If there's any issues as well, please let me know. And yeah, before we start though, as always, I need to show you guys the risk disclaimer. I can see some new names here. So it's important that everybody's fully aware of the risks involved. So let's spend a few seconds on this and then we're going to go ahead with today's presentation. Okay, I think we're good. So awesome. We have Don Holm, Ugo, we have Keith, we have TSC and Sahid in the chat today. Hope you guys doing well. Let's kick off, and we're gonna begin with the easy part, which is the euro. Why do I say easy part? Because there's nothing going on here. It's absolutely nothing going on, and I don't really want to get involved or engage here. We're trading in a nice, good sort of little rectangle, and just waiting for that break. It's gonna happen at one point, so we just need to be alert for it. And everybody's sort of a little bit, sort of, I would say, nonchalant about it and probably ignoring it. I think there's less people now trading than before. But I think it could be something like, for example, GBP versus the USD. So GBP versus the USD, this is your daily chart, and the market was, trading sideways for a very long time, and then the market took out support, and now it's moved down a little bit since we had that initial break. The market moved down with about 92 pip. It's been a bit quiet, of course, because Brexit is sort of the main driver here, and we have several votes coming up. The first vote is going to be on, I think it's on the 12th, which is going to be a vote on Theresa May's Brexit deal. If that gets rejected, they'll move ahead with another vote on the 13th, which is should Parliament accept a no deal? If that gets rejected, should Parliament ask for an extension in the negotiations until June? So these are the different things, and it can go either way. If they get a Theresa May's deal, I definitely think the GBP is gonna probably continue to gain, and if we get like a push towards no deal, then probably gonna go upwards. But this is sort of technically this setup here is very similar to what we're seeing in the euro. And usually when you have a break like this, you'll have that momentum to the downside here. So that's what we're waiting for here. I think it will kick off. It will be interesting, but not right now. Here's a GBP versus the USD. And, we're dealing with that big head and shoulders pattern. And that big head and shoulders pattern triggered already on the 26th of February. And you have a left and a right shoulder and a head. Now, the reason why I prefer EURGBP over this is because the breaker candle was so big. And usually after such a big move, we need some sort of a pullback. And yesterday I said you can probably work with this short-term low. And I also said that I would have preferred a decline to 32 and then turning bullish. And I think that is what's happening right now. We're having a bit of a pullback, and I'm going to remain bullish about 31.40. But we're having that little pullback. I think we almost traded below it. It's probably going to trip a few stop loss orders, maybe down to 32, maybe 31.70. But then in this area, I prefer long positions. So Let's see if I can highlight that area. So from 132-ish, I'm looking for that little move, and then most likely upwards after that. Again, though, if you have to trade, if you really want to trade a GBP pair, I would actually prefer EURGBP. Here's dollar yen on fire, guys, and wow, look at this. So as you might remember, we're talking about turning bullish on the break here on February 11th. We went up to the first target more or less, and then abruptly traded lower, and then moved up again, and then abruptly traded lower. But this market is on fire. We're up at the highs here. Of course, this is today when you read about it in the news and things like that. But this is, and you might think, well, today is time to buy. No, today is not time to buy. The last setup we shared was to buy at 110.36 and see this just go up to the December 26 high. But look, we're far beyond that, almost at 112.16, which would be a natural level to book profits. So here, I would look to get out of 50, if not 100%. If one gets out of 50, probably allow this to go a little bit higher, but then most likely get out again. And here we can reduce the trend defining level a tiny bit to this low here, and we can now get rid of these sections here, and in essence just look for a pullback, because I think that's going to happen eventually. So we just take our fibs. Here are your Fibonacci levels. You can just see as well. You have some horizontal levels. So probably somewhere down here could make sense to turn bullish again. Let me just change the coloring here. Yeah, so somewhere down here. So we're looking at a level slightly lower than the first fib. So that will be the 111.27 level. And then from here, looking to rebuild and turn bullish again, targeting that 112.16 level. Gold prices under pressure today. And there's not too much to do. Obviously, all good things come to an end. But we're not there yet. When you're looking at this, it's very easy to get panicked because it's just going straight down. But remember, guys, here in dollar yen, it looked like we were going to take out these levels. Not just one, but two times. It looked like we were going to take out that trend defining level. But the market prevailed. And it's a little bit like the way it works is like this. As long as you trade above the trend defining level, I'm targeting those levels. I'm targeting those highs. And this is the case of gold. As long as you trade above this level, I'm targeting that high up here. And I'll target that high until proven otherwise, until we trade below the low here. So this may trade sideways for 2-3 weeks. But again, as long as you trade above this level, we'll most likely head upwards. You might remember we had that little pullback, and I said probably around here people are going to buy, and stop loss was down here. Well, almost got stopped at 1, 2, 3 times, and the market sort of traded down on February 6th, and then the profit turned into the position turned into profit on the 15th. And this is where a lot of people lose patience. And guys, I lose patience all the time. It's just that I guess I do lose patience far less than the average person, and that's why I'm profitable in my trading, and maybe those 80% are not. But yeah, here it looks horrible. But who knows? Maybe this evening it looks like it might bounce a bit and then down and then potentially upwards again. So there's no change to the outlook here. The best thing is not actually watch price if you're already long. Here's crude oil, and crude oil is looking rather interesting, I think. The market now traded above that high, well, slightly. It hasn't necessarily managed to strongly push above the high, but it's so close that I have a feeling that it could potentially break. And if it does break, then my new trend funding level becomes this low, which is also the February 26th low. And I'm sort of looking for maybe a 50% pullback in worst case, and then that push to the upside. And here's your S&P 500. And we talked about buying here, and in fact, we've been bullish for quite some time. And the trend is bullish about 27.63.5. And again, I sort of continue to be bullish and just targeting those highs. And this is the German DAX. It's literally on fire on 1.11%. It looked like the market would sort of sorry, it looked like the market was going to head lower for a few days here, but again, 1, 2, 3 touches relatively close to the stop, but no, we're here. And I don't think this is it. I think this is just the beginning of something. So I would keep this for longer. I would not necessarily get out here. You can definitely tighten up stops a bit if you want to. Maybe put them just below yesterday's low. So put in somewhere around 11,392.9. That's what I would have done. Of course, what you want to do with your account is up to you. But this is what I would have done. Tighten things up a bit, not going out here. Why do I not want to get out there? Because look, you got yourself your left, you got yourself your right, you got yourself your left and right shoulder, and you have your head. The target of this head and shoulders pattern is here. It's about 11% upwards. I know that is crazy. Why is it crazy? Well, because absolutely every man and his dog are bearish, right? Everybody's bearish. People don't understand what's going on. Well, what happened yesterday is that we have some bad official China PMI figures telling us that the Chinese manufacturing sector is struggling. Today, you had the private Caixin PMI, which measures a different set of companies, medium and smaller firms, and we had slightly better numbers than expected. In the US, the US composite, I tweeted about that, I think it was last week, jumped up a bit. So confidence indicators, these surveys are all sort of hinting that we maybe have seen a low in the economic slowdown. Now, what's going to happen, I think, well, I don't really know what's going to happen, but I can tell you that most people are bearish. Most analysts think we're going to, they don't understand why we're not already in some sort of a recession. And everybody's just very, very bearish right now. But the markets are going straight up. The markets as a collective many times is much better than sort of macroeconomists in particular. Because the macroeconomist, he looks at economic indicators and then tries to figure out where the stock market should be. But the stock market is a discounting mechanism. It's trading today based on what they think is going to happen in the future. As a simple explanation, to give you an idea, you probably heard about the PE value, right? Price over earnings, or earnings over price. That is a value. It's usually like 8 or 9, and what that tells you is that the annual earnings, say if it's at 8, so you need 8 years of annual earnings to buy back the company. And I think the PE value for something like Apple is maybe 13. And then people use these levels to try to figure out. But the key point is this. In the price of something like Apple, let's actually search for that. This computer is a bit sluggish because I'm using it as well to do the webinars, but it's a bit sluggish anyway. It's at 14.13. So that means that this company is traded at 14.23 times the yearly earnings. So people buying it today, they in essence need to wait 14.23 years until Apple has made enough profits to sort of buy itself back, so to speak. So people, when they buy it, they're taking a view to what's going to happen in the next 14 years. That's the discounting mechanism. That's why, for example, people say companies with low PE values are better. That's what they say, at least. It's not always like that, by the way. Why? Because if you have a solid company that is making some solid profit and it's a good product, you know the product, and you say, well, this product will still be hot in 3 years, and the PE value is at 3 years, then you know that within 3 years, this company, you sort of would have generated enough money to generate, it would literally double, so to speak. And that's why people look at the PE value. But for the purposes of today's presentation, what's interesting here is that the market is forward looking, and the market has been moving up here because the market has probably seen, as a collective, some very clever people have seen, all right, we're probably gonna go upwards in the economy. This is probably the worst thing, and now it's going upwards. It's just that the economic data is released with a few lags of a few months. The survey data is sort of released with just a few weeks lag, and that's why. But still, really, like the market will still sort of bottom out maybe a month or two, as now, like 2 months before the numbers start to print. So with this in the backdrop of everybody being bearish, I think we could probably continue to trade upwards. So maybe the DAX 30, maybe keep it for 12,050, and maybe fool the target at 12,500. Not sure if it's going to go all the way up there, but definitely upwards. This is no too much different to what we did before. Remember this little head and shoulders that I shared with you guys here? That was the break. I said it's probably going to go up to these levels, which it did, but off to this little detour here. And that, guys, concludes today's market update. If you have any questions, just put them in the chat box to see if I can help you. If you don't, then we're going to wrap things up. If you have any questions, let me know as well. Don't forget to check out the under trading on ATFX.com. On the market analysis, we have technical analysis, and that is a little section. I just joined the company, so there's not a lot of content here, but I'm putting up some articles here that you can read. For now, it's going to be maybe one article, maybe 2 articles a week. That gives you a little bit of an idea of what's going on. The formatting is a little bit weird, but you can still sort of read what's going on here. As well, if you're interested in about ATFX, you definitely want to check out this. It's called Under Trading Retail Edge Account. I was looking at the spreads that they offer on the Retail Edge Account, and look at this. The Aussie dollar minimum spread is 0.7, usually 0.8. And what's quite interesting is that most brokers, they're gonna give you a tight spread on something like Eurodollar or maybe GBPUSD, but then everything else like Euro CAD or Euro Swissy or Euro Pound, it goes really, really wide, because they use the Eurodollar spread to get you interested, and then when you trade other things, you pay like absurd amount of spread. I know, for example, in GBP yen, ATFX has a tighter spread than IG markets, CMC, and FXCM. So you really want to check it out. You can probably do some good savings by trading with ATFX. Now, this is not the standard account for people trading with $50 or less. This is the standard edge account, and the minimum here is $5,000. But if you come via me, you send me a message or Twitter or WhatsApp, whatever you want to use, we can give you for the equivalent of $5,000. So, for example, $5,000 in GBP is 3,787. So you can, with an account of just 3,787, you can get access to this edge account, but only if you come via me. If you go directly to the guys, they're probably going to tell you to put £5,000 and not 3,700. So check it out. You'll find more about it on the homepage. We offer shares trading as well, so you can trade shares and things like that if you like to. We offer cryptos. The guys here are quite nimble. So if you're looking for some specific market and a lot of people request about it, we'll add it to the system. It's not going to be added like from one day to another, but it will definitely be added if a lot of people ask about it. So it's not your typical company where it takes years and years to get something good on the markets. Awesome, guys. Have a great day, and I'll see you guys on Monday. Thank you.